Lyft stock made a new 52-week high recently, breaking above $20 a share. And on the last trading day, March 22nd, we detected an unusual trade worth $877,000. So we will analyze this unusual option activity to find out how wealthy investors are trading Lyft. Are they bullish or bearish? So we can trade in the same direction to make money while the rich are getting richer on Wall Street. In this video, we will go over how we are trading Lyft based on these unusual options, because we are doing something slightly different this time, trading in the money calls instead of out the money calls, so you can learn the differences between the two. Before getting into the details, we did want to mention that Lyft was one of our prior membership trades, okay, that we shared with our members only back on December 13, when Lyft was trading at just $14. And based on our analysis back then, we went long bullish on Lyft, as you can see here. And so if you still have this position, this would be quite a lot of gains, because you can see that from $14 all the way to $20, that's a 43% gain just on the stocks, if that's all you did, buying stocks instead of options. All right, so that is why our membership trades with higher probability of profit is so profitable. If you are interested in our membership trades, not the ones that we share publicly on our channel for free, where they are lower probability of profit, then make sure to go to our website to gain access to the higher probability of profit trades. Okay, so what is going on with Lyft on the last trading day? Let's take a deeper look at the data. As you can see, on March 22nd, we have these October 18 options at the 26 strike calls, 3,900 contracts, paying $225 each. We have to multiply by 100 since this is options pricing. Each option represents 100 shares. So 225 times 3,900 contracts is $877,000. Okay, so when we take a look at this trade on October 18, we can see here these 3,900 contracts for the volume right here at the 26 strike calls. Okay, so what they did was they bought these for $225. And when you analyze the trade, you can see that this is clearly a bullish long trade. Okay, so what we did differently though is these calls, they are out the money, okay? Because you can see that 26 strike calls, that is above the current price of $20. That's what it means to be out the money, okay? Delta of 41, okay? So what we did was we went in the money, and we chose a different date, July 19th, okay? And so you can see our position here at the 18 strike calls. Okay, this is our position right here. And we are at the 70 delta. And since 18 strike is below the $20, this is what it means to be in the money. Okay, and so by buying these for $420, you can see our trade over here. It's also a long bullish trade. Okay, so what is the difference? Okay, well, let's take a deeper look. So for the unusual options at the October 18th, you can see here that their delta here is positive 41. They have a theta of -1. Okay, now if we take a look at our trade, 420. So essentially, they paid $225. So we actually have to multiply by 2 in order for this trade to be more similar in cost than our trade, right? And by multiplying by 2, their theta is actually -2. Okay, so they have a more risk for the time decay here. Okay, they have a 83 delta. Okay, so that is kind of the key differences between the two, but the main one is the theta, because what happens is you can see that our in the money call here is only -1.25, so about half of the decay. So the risk is halved. So it has less risk for the time decay. And our delta is 70. So by paying the same amount, right, they're only getting an additional 10 delta, but they've increased their risk on the time decay by nearly a factor of 2. So that's why we wanted to trade the in the money call for this situation at this time, based on other data that we are analyzing, based on the situations. There's a lot that goes on behind the scenes when we do our analysis and decide what is the best strategy at that right timing. So that's what we went for. And so there is less risk, because you can see that our break even is right at about $22 a share, where the blue line at expiration meets with the zero profit loss line. Okay. And for the unusual options, the break even, you can see here, is all the way at $28 a share. So Lyft would have to trade above $28 a share for these options to be profitable. So which has a higher probability of profit in comparison between the two? Well, surely the in the money calls, because you can see that between the $22 or the $28, let's take a look at how much Lyft has to increase. So currently right here at $20, $22, that's about a 9.5% increase for the in the money calls to be profitable. At expiration, 28 calls, 39% increase in Lyft for those options to start becoming profitable at expiration. Okay, so that is why the in the money calls have a higher probability of profit, because of the lower theta decay risk. Okay, so that's something to always keep in mind, to watch your theta decays. And there's still unlimited profit potential for both of these strategies. You can see we still can make an unlimited amount of profit if Lyft goes up. There's no limit and cap to this, because these are long call options here. Okay, so that is the kind of the main difference, is lowering that time decay risk, because we are in the money by buying the 70 delta call options here. Typically, this is more closer to a stock replacement strategy. Okay, so something to consider, and hope you learn more about the differences between the in the money calls and the out the money calls. If you want to learn more about our option strategies, you want to gain access to the trades that have higher probability of profit, because this trade is not high probability of profit anymore, because number one, it did not even break above $1 million trade here. Okay, because typically when we do our membership trades that are higher probability of profit, we always want to follow the millionaire traders. Okay, they tend to be more accurate in predicting stock price movements because they have more capital, okay, to do the research. And we simply follow that direction to also make money at the same time. All right, so if you want to learn more, go to our website and let us know in the comments below, what do you think will happen to Lyft? Do you think it will continue to lift itself up in its share price, or will it drop back down? Let us know in the comments below. And as usual, please smash the like button, subscribe if you haven't, and have a wonderful day.